We'll get started here in just a moment. Today, we're going to be going through some live mortgage rates, and then we're going to do a deep dive into 4-unit properties. A few different loan types we can do that with. So just hang tight real quick. Let us go live on all the different platforms before we get started. We put the chat up on the screen. Feel free to drop a comment there in the chat as you tune in. We appreciate the comments there. Good morning, everyone. And we'll get started in just a minute. Hope everyone's been having a great week. Happy Friday. Ready to get to it. All right. All right. Looks like we're live on all the different platforms, so we'll go ahead and get started. We're going to take the chat off the screen for now, but feel free to keep dropping comments there in the chat, and you can drop any questions in the chat as well as we go through the presentation. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through the live rates for the day, and then we do a deep dive into a different topic. Today's topic is something we're very familiar with here at the Mortgage Calculator, which is 4-unit properties and some different ways that we can finance 4-unit properties, because at the Mortgage Calculator, we deal with a lot of investors and a lot of multi-unit properties. So our sales manager, Jose, with 28 years of experience, will do a deep dive into the 4-unit properties here shortly. But before we do that, we'll do what we do every morning, which is pull up the different programs and see what the rates are looking like. So Nick, if you're ready, let's go ahead and pull up our pricing tool and check out the rates today.
All right. Let me switch my screen and we will get started. So, as Kyle mentioned, this is our pricing tool for our team of mortgage professionals here. This will show us the general rates and APR. For today, it is December 29th, going to be the last day of the new year with year with rates. So it'll be an interesting show here. If you'd like a full breakdown of all of the fees that are itemized into the loan estimate that make up the APR, please get with one of our team members. We have over 400 loan officers in 24 states. For the demo today, we'll set up a basic scenario to compare across the programs. We'll set a $400,000 loan amount. We'll set an LTV of 80% loan, 20% down payment. And we're going to ask the computer to find the best options, the lowest rates we can offer for conforming conventional. We'll compare that with FHA, which is usually the second option that we explore. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond the standard. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. And USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know. We'll start with the conforming conventional, purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio of 40% here. So with these settings, let's check the rates as we do every morning. All right, love to see fives. We got a few five now, so that's amazing. Best option here at the top, 5.875 for 2.5 discount points in cost. Put the final APR at 6.159. Pretty amazing. Just a few months ago, we were up closer to 8 almost. So all the customers out there that have been looking for properties, definitely time to get back in the action here for the new year. Now, if for any reason our customer doesn't qualify with a conforming conventional option, typically the next option we want to look at is an FHA. So we'll set up the same exact scenario. This time we'll select FHA. Everything will be exactly the same, even though FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio. We'll keep everything the same here so we can compare apples to apples across the programs. So best option for FHA this morning, 5.25 rate, 2.375 discount points in cost. Put the final APR at 6.170. So actually a touch higher today than conventional. Typically, FHA is a touch lower. So our customers that qualify for both, definitely check that out. Some days they switch. They're very near each other here at this scenario. And the customers that must use FHA, this APR does include the upfront and mortgage insurance, which is FHA that is required. So keep that in mind. FHA definitely has some good options for all our borrowers. Now, if for any reason our customer doesn't qualify for either FHA or conventional, unfortunately, many other banks or lenders will have to deny that customer, but that's where we love to come in and present our non-QM options, also known as expanded guidelines. So we'll keep everything the same here as our other examples. However, now we can choose a new income option for our non-QM programs. So full doc is what we use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So we'll typically choose a non-QM option that takes advantage of one of the alternatives. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. A personal bank statement 12-month is the most popular. That's what we're using for the demo. We also have RSU, stated, VOE, 1099, P&L, no income CDFI, all kinds of different variations. Most popular, though, is the 12-month bank statement program, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit tax returns, might have various write-offs and may need a little bit of extra income to qualify, or just may not qualify at all. Either way, we'll solve the problem. No tax returns involved at all. Simply use the last 12 bank statements to determine a debt-to-income ratio of 40% in our example here, using no tax returns at all, just the cash in the bank. So many times our self-employed borrowers qualify for much more income and can therefore get that home they want. So let's check out the bank statement options today. All right, best option here at the top, 7.25 rate, 2.5 discount points and costs, with the final APR 7.678. These bank statement non-QM options typically don't change on a daily basis like the conventional. So this has been the same basically throughout the week. Good options here. It's about 1.5 points, a little bit less, point to point and a half higher than conventional for a bank statement option, which is typical. Before, when the rates were going crazy, we had a little bit of a flip-flop there. Now this is the typical markets where our customers that may not qualify conventional can get a great non-QM bank statement option here for slightly higher cost. And if we scroll down here, some of these other programs, hundreds of variations at higher rates and costs may allow things like bankruptcies, foreclosures, and other credit events as well. So we can solve quite a few issues with these non-QM programs besides the standard income issues. And before we get into Jose's example, we always want to do some live pricing for investment properties. So we'll set up the same scenario here, 80 LTV, 20% down payment. And we're going to have the computer find the lowest rates possible for conforming conventional and our non-QM expanded guideline options. Remember, FHA, VA, USDA, all the government programs do not work for investments. So we'll simply compare these two. We'll start with conforming conventional. Everything's going to stay the same here. All we've edited is the occupancy to investment. So we can see the adjustments we have on conventional for investments. All right, some good options here. Again, these were a little bit crazy when the rates were a little bit volatile, but now these are great options for our customers that qualify for 2 years tax returns. 6.624 rate, 3.5 discount points and cost, plus the final APR 7.031, which is pretty amazing there. Not even a point higher than the primary options there. So great options here. But most of our customers that are investors want to check out our non-QM options, and definitely recommend all of our teammates send multiple options as well to compare, especially when these options were not viable before. Definitely non-QM was the only way to go. So for the final demo, we will set up the same scenario again. And this time we'll choose expanded guidelines. So first thing we need to edit here is the income type. So for an investment property, the most popular income type is going to be our DSCR, our most popular one by far here at the mortgage calculator, because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rents from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. The estimated rents can cover the expenses, the PITIA of the mortgage, aka the property cash flows. That's a ratio of 1 or higher. We have options for ratios under 1, but we put 1.5 for the demo so we can see all the programs pop up. And finally, prepayment penalty must be selected. 3 years is standard on non-QM investment properties. That's what we use for the demo. We can select 0. That will limit what shows up and cost more. We could also select 5, which will again limit what shows up, but does save our customers some money if they're going to hold the property. 3 years is standard. That's what we use for the demo here. So let's check out the DSCR options today. All right, best option here at the top, 7% rate, 3.5 discount points and costs, puts the final APR at 7.526. So notice we're within a half a point of conventional there. So I'd say still 95+% of investors would take a DSCR option here for a half a point difference in the final APR. You can do a lot of flexibility here under the DSCR, 1, 2, 5, 10 loans at a time. Refinance multiple properties, purchase multiple properties, no income or employment documentation needed. So much easier for our investors there. And if we scroll down here, some of these options at higher rates and costs may allow things like bankruptcies, foreclosures, other issues that would otherwise cause our customer to not qualify for conventional. So always look at our DSCR options for that. And some of these may allow short-term rental income, very popular request. So some great options there. Now let me go ahead and switch my screen. And we'll talk about Jose's topic for today, which is a very popular use of the DSCR program. But we want to go through all the different options for our customers to purchase a 4-unit property. So investors obviously love 4-unit properties. Even primary home buyers love 4-unit properties, obviously to make a little bit of extra income, get that extra qualification, especially when the rates are going up. Adding an extra unit to your home in order to qualify could obviously be a great tool. So 4-unit properties, very popular. And we have quite a few different options. So Jose, if you're ready, let's have you go ahead and pull those up.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. So, 4-unit properties are our ultimate house hack. So, we definitely recommend everyone when they're buying their first property to maximize the effort because you can't go from a 1 unit to a 4 unit usually as a primary unless you're relocating, hundreds of miles away, new job and everything is well documented. That's usually going to appear like there's something funny going on. So let's jump right into it here. I am sharing with you all the nice new LTV that we have for our 4-unit properties from Fannie Mae. Jumping right into the good stuff here. Um, we do have now possible for primary purchases only, 95% LTV on your conventional loans. And let me make this a little bit bigger here. Okay, so here we go. So we're looking at 7.125 is at par, which is an amazing rate considering 30 days ago, a little bit over 30 days ago, this wasn't even possible at 95% LTV. So your 4-unit primary purchase is possible now. A conventional loan, only 5% down, and you can buy that all the way down to 6.125%. And I wanted to state, like I do in all these shows, uh, this is our lowest rate option when we're considering points and fees tests for compliance purposes. However, if your deal is structured in a way that you have seller paid closing costs and the seller can pay towards the loan discount, and then you will not have any issue with your compliance test, and you could certainly get a rate lower than this one from us. So now we have our 4-unit primary FHA purchase with only 3.5% down payment for your 4-unit properties. 6.25% is the amazing lowest cost option at par. And you can buy that down, like Nick was saying. He likes to see those fives on there. Well, we have 5.25%, 4-unit, no loan level price adjustments for 1 to 4 unit on an FHA loan. The only thing you do have to note for this 4-unit property that there is a sustainability test for FHA. So you would have to do a calculation for the 4 units and make sure that they can cover the housing expense, 100% of the housing expense. So our next option here is 4 unit primary VA. Obviously, all VAs are always primary, but here the rate does go up a little bit. You're looking at 6.625, almost at par, and you can buy that down to 5.5%. Again, 4 unit VA, 100% financing for this 4 unit VA loan. Now we have a 4 unit non-QM purchase full doc, 90% LTV on this option. And as is always the case with our non-QM loans, mortgage insurance is never applicable. So here you have 10% with a little bit of a lender credit. 9.875 is at par, and you can buy that down to 9.125. Now, for a couple of investment options for you, here is our bank statement option for investment 4 unit, right? And here we're looking at 85% LTV, which is pretty amazing. Investment bank statement 4 unit, 15% down. And lowest cost option 9.75%. Lowest rate option 8.25%. And when you consider the loan type we're talking about, you'll realize that is a very amazing rate. So now our flagship program here, DSCR, we are able to go to 80% LTV on a 4 unit purchase using DSCR guidelines. So 8.75% lowest cost option with a lender credit of 0.113. And you can buy that down all the way to 7.75% for our 4 unit DSCR purchased. And now, last but not least, our 4 unit DSCR cash out, 75% LTV. So here you have it. You're looking at 8.375%. Amazing rate is at par. And you can buy that down to 7.625. So some amazing house hacker options and also great options already for our investors for their 4 unit purchases and refi cash outs.
All right. Yeah, I think it's important to note too that, you know, when you're talking to your borrowers, especially, on a purchase, they may not realize that a 4 unit is in the cards, right, Jose? I mean, that's another thing. People focused on single families, not really thinking about the house hack, right?
Correct, because sometimes it's the price factor that may concern them because the big part on this that you just hit the nail on the head there is that they're not aware usually of the income that can be um, derived from the property for purposes of loan qualification, right? They get on an unseasoned rental, which is what the purchase would be considered. The units 2, 3, and 4 would be unseasoned rentals. You get 75% of the income that it generates gets added as income for the borrower. So again, if it may be a little bit more expensive to do that 4 unit, but now you're getting an extra $3,000 or $4,000 a month in income to help you qualify. Normally, that puts them over the edge to be able to qualify.
Exactly. And especially in the housing shortage, which is in most markets, that can open up an entire, speaking to your clients, them speaking to their realtor. Now all of a sudden their search widens exponentially, right? With 2, 3, and 4 units available.
Absolutely. And depending on the market, short-term rental possibilities, right? You're living in unit one and units 2, 3, and 4 are short-term rentals if you're in that kind of a market, and it just opens up all sorts of possibilities.
All right, it looks like we got one question here about this topic, and it's a good topic to always go over. On a DSCR, Jose, on a DSCR, as far as appraisals go, do we order a 1004 plus a 1007?
Well, that really depends on property type. What we're looking at here, if it's a single family, one unit, you would order a 1004 and a 1007. If it's a single family, but it's 2 to 4 units, because they're still considered single families since you have multiple units, each unit occupied by one family, you'd be looking at a 1004. I'm not exactly sure on the number on the report, but the income portion is a 216.
1025
1025. Yeah,
216.
yeah. So it's a 1025 and a 216, which is an income and expense report for a small multifamily.
So you're looking at the net there, right, with the expense report as opposed
No,
to the
well,
gross.
that's a good question. I always wonder why they ask for it, because all they're really looking for is just the gross rental income portion. But because it's considered a small multifamily property, I guess that's just the checkbox that has to be checked as for a 216. But they don't really analyze the expense part, just the gross rental income part.
All right, perfect. Well, great topic there today. Remember, we do this 11 a.m. Eastern every weekday where we go through the different rates and then we go through a new topic every day. So today's Friday, so we'll be back Monday with a new topic. We appreciate everyone tuning in, and we will see you on Monday, 11 a.m. Eastern for the next
See you on
episode.
Tuesday. Monday's New Year's.
Oh, sorry about that. On Tuesday. Getting a little ahead of myself there.
Yep.
All right. We'll see you Tuesday, 11 a.m. Eastern, for the next episode
Wait,
of Daily Rates
wait,
Live with the Mortgage Calculator.
last minute question. Last minute question. I see. Uh, okay, yeah, we just did answer that, but yes, that when you are purchasing a property, like let's say it's a primary 4 unit where you have the other 3 units are rental units, and you haven't claimed it yet on your tax return because you're buying it, that's considered an unseasoned rental. Unseasoned rentals, we are able to use 75% of the market rent from the 1007, or if it's currently leased and there's going to be an assignment of leases because the tenants aren't moving, then it would be based on 75% of the current lease.
All right, great. Well, we'll see everyone on Tuesday then, 11 a.m. Eastern, for the next episode. Take care, everyone.
Have a great